Good evening. This is the market update for Thursday, July 18th. Nice little up move on the market today. We broke through new highs, as you can see on the Dow, and it was only a couple of weeks ago. We were down here at 14,500. You remember me saying, it'll probably only take us a couple of weeks to bust through new highs, and lo and behold, here we are, new highs, and volume's actually starting to slowly creep up, which is a good sign. But before we jump into the charts, want to go over the email I sent out yesterday regarding the swing trade mentality. What a lot of traders have gotten lulled into over the last couple of months has been to jump on breakout plays, look for a couple of pennies, and run for the hills. And when you start trading like that, and everyone trades like that right now, you can see it on Twitter and in the message boards just by the kind of posts that are there. Once everyone starts doing something, it stops working. And essentially what happens is stocks that are in nice little uptrends, traders pile in, they move up a couple of cents, they stall out a little bit, and immediately everyone sells. They beat away the natural support that's on a stock, and it dips. And then everyone moves on to the next stock. And you come back and you look at it a day, 2, 3 days later, and lo and behold, the stock is busting out, it's running up to new highs, etc., etc. This is a swing trader's market right now, in my opinion. That's the reason I sent that email out. It's time to change the approach you are having towards this market right now, in my opinion. I believe this market is not going to go straight up. There's going to be dips, there are going to be retraces, but I believe we are going to be in store for a very nice second half of the year in the market. And small cap stocks and micro cap stocks are starting to lead. And in markets like this, swing trading works fantastic, and that is why you're seeing a lot more of the plays that come out being a more swing trade approach. And the way I usually approach those swing plays is I buy initial position. If the stock continues to break out, I add to that position on breakout areas higher. Or if it dips back on the still penny flipper trading that we see out there, I pick up some scalp shares, I add to my position, I pick up the rest of the position. And with that in mind, I've been starting to slowly increase my exposure to the market. And you might think, man, that is crazy given this 900-point move that we've seen on the market right now. But I believe the perfect scenario could be setting up where we see a stall in the large cap stocks and that money flow to the small cap stocks. Now, after hours, we have Google down, it was down 55, it's down 42 now. A couple of the large cappy stocks starting to sell off. I mean, they've been up massively over the last month or so and more than due for a pullback. But as Bernanke has said yesterday, he's still here. The punch bowl is still here. The economy is slowly getting better. And what you don't see mentioned a lot in the media right now is that when the economy starts to get better, the stocks and the segment of the economy that does great are small and mid-cap stocks. And the reason for that is they are focused on the U.S. If the U.S., most small cap stocks, most micro cap stocks are U.S.-based stocks. If the economy is turning and getting better in the U.S., those stocks will benefit. We've seen this happen many, many times over the years. But anyway, that is how I am approaching the market right now. Dow 15-minute chart. You can see we've had this very, almost month-long move up in this bearish rising wedge, and we had this additional channel that was in place. Both of those channels met today. So support right now is 15,450. That's where the 200-day moving average. We did see a little bit of a dip into the close. Funny enough, Google sold off, so perhaps the report got leaked because it has become a very leaky market right now. Let's see what happens tomorrow. I mean, the best scenario for us right now is we don't see the market implode. We see a gradual small sell-off, and then we will continue to see chart plays, uptrending plays in small cap land do very, very well. Dow Transports broke out to a new high today. Russell Small Cap Index broke out to a new high. Oil broke out to a new high today. And actually, let's look at a 5-year chart on oil approaching a really key level here, 110, which is why we've jumped into some small little oil plays that look set up on the chart that have flowed into new little uptrend. Now, a stock I want to show you an example of where selling the quick gain ended up backfiring was actually a stock that we played a couple of days ago, ZHNE. This was us buying here 3 days ago at 92.93 cents. Our target was $1.08 to $1.15. Ended up trading as high as $1.10 that first day, which is why we booked a bunch of our gains and ended up selling the next day. I actually forgot to buy this one into its earnings report. They beat not that much, mind you, almost the same as what they did back here, but the stock just exploded. And, we've been seeing this happen over and over and over again. And what this kind of chart tells us is it pays to be a swing trader, to be patient, and to ride these stocks higher. HUSA, little small oil stock. Positive MACD cross today on big volume. Strong ADX. Our stochastics up through 50. Very nice breakout here. 31 cents is where they will start to chase one. And this one, swing target, 40 cents. Very strong support, 26 cents. Like the chart, small oil plays are probably going to blow up in the next couple of days if this oil move continues. And this is a stock that will benefit. And as you can see, it is in an uptrend. And these are the kind of stocks that have just been blowing up right now. Mad Cats, another example of this. We're up 50% on this one. Well, almost 50% over the last, month or so. Nice breakout today on this one. Got up to that 61 cents first target zone. Mojo, Xmas holiday season, still a few months away. I mean, we could put $1 in front of the stock price, and this is what the hype and potential could be for this stock going into year end. Continues to be a swing play for us into year end. That is the plan. CLSN. This is a stock that every once in a while likes to go on a big move. We've been waiting for this one over the last 2 weeks to break that 20-day exponential. And today, out of the blue, boom, she went. Spiked up to 122, traded the rest of the day there after that first hour pop. Positive MACD cross, stochastics up through 50. Setting up like it did when it went on that big move back in May. Swing target here, $1.44. Support, $1.12. And that is how we're approaching this stock over the next couple of days. And actually, looking at it in after hours, we had it as a possible gap candidate. Already 126 after hours, above the 50-day moving average. They could be chasing this one tomorrow, especially if we get a little bit of good news. CPRX. This is one we played last week. Spiked up to 106. Fell back over the course of a couple of days, consolidated, broke up again today. Nice little flag formation, broke up above the triangle today with that close. Looks very, very nice. 119, 140 are the targets on this one with support at the 20-day, 94 cents. Very nice risk reward, very nice chart. We are chart traders. Time for us to start playing charts. Time for us to start trusting in our ability to read charts. If it stops working, we readjust the strategy. But I think this is going to be a winning strategy for us over the next few months. ISR. Very nice triangle setup here. 50-day moving average, 55 cents is the breakout. Positive MACD cross. Target, 70 to 75 cents on the swing with very strong support at 50 cents. So we have a very nice swing chart setup. Doesn't have a whole lot of volume, but when it starts to go, it'll slowly creep up. And I was actually debating not even posting on this one and just slowly riding it up because one of the things that we see happen is we jump into a stock, we post on it, everyone buys it. It does not immediately explode 25%. So the impatient traders sell for penny loss, 2 penny loss. Takes the natural support out of the way, selling begets selling, and it destroys the nice little uptrend we have. Takes a couple of days, and then you end up looking back and you see these stock trading up at 70 cents. So that is the approach we are taking right now. OTIV. Look at this move over the last month from 91 cents. Just another example of swing is in. HEB had a big volume spike on a little bit of a rumor a couple of days ago, has slowly bled all the way back down, right to support, trading under cash value. I think it's a great pickup here at 23 cents. The longer this rally continues, the fewer and far between, actually poor language, the fewer plays there is actually going to be down here. and the more the buying pressure is going to pick up and the more these are going to pop. They got a load of cash, cheap play, nice little swing play, 29 cents target, rock solid support down here. I like it. BLDP. We picked this one up a couple of days ago on that initial push to 2. Dipped right back down the next day to 189, which we added to our positions. Yesterday, 220. I mean, a 30-cent move in the course of a day. Traders who were expecting the fast move sold down to $1.89 and then watched it as it ran 30 cents higher. So very nice volume on this one. We'll continue to watch it for another possible rebreak of 220. So we've got some very, very nice setups. Swing mentality in this market. That's the way I'm approaching it right now. We've got some solid charts here, ready to roll. As I said a couple of weeks ago, I think July is going to be a very, very good month. We still got a couple of weeks left for some fun and some very nice chart setups. So that's it for the video. Have a great night. See you guys in the chat room tomorrow. Bye.